Good morning, good evening, good night, wherever you be watching this transmission. Tis I, Mike Martins. Welcome to another Australian housing wrap-up, weekly wrap-up. We got quite a few articles that slipped past me a few days ago that I didn't catch, but I ended up getting them through other people, sending me them either via email or Facebook or whatnot. There's a lot happening in Australia, so if you're just jumping on the bandwagon and jumping onto the channel, I've been covering Australia for many years now. Close to 400 plus videos, 440 plus videos were erased about the Australian housing market for some bizarro weird reason. Not sure why. Over the last couple of months, maybe half a year now, they've been purging a lot of my Australian housing videos and basically warning people of times to come. Anyways, guys, so this is a couple of really good articles here. That's what's happening on the ground. We're going to get Andrew in, and we're going to get Kevin, and probably going to get in Steve Stevenson there. We're going to get them all on the show and giving us updates on what's happening in Australia. So Melbourne house prices to finally find a floor, Treasury chief said. I think it's still far from the floor, but let's see what's this. The Victorian government says the worst of Melbourne's property crash may be over, with the downturn showing signs of bottoming out. The comments by Victoria's top economic bureaucrat come as a lending housing economist predicts a small bounce in the market with federal election over and the interest rate cuts tipped. So you know that they're now tipping interest rates and they're going to keep the Ponzi scheme going for as long as possible. But the problem they're not understanding is a lot of this money was due to capital flows coming out of China and either laundered or illegally brought into the country or brought in just in handbags and purchased up a lot of this property. That's why you have a lot of vacant properties in Melbourne and Sydney, which led to a lot of millennials and young people and even old baby boomers leaving the major cities to find green. Do you have green in Australia? Is it green grass? Prosperous over the side of the mountain. To see what was on the other side of the mountain, basically, to move to prosperous areas. You could see it in Hobart and other areas that grew pretty much fast because of the affordability crisis. But the fall in real estate prices, which have now seen the largest annual decline on record, is still expected to cause a big hit to the government's bottom line as it prepares to unveil its budget next week. So we'll be on covering that too. David Martin, Secretary of Department of Treasury and Finance, says some of the latest data is causing optimism with more home loans being written, more houses selling at auction, and decelerating price declines. Mr. Martin conceded in the last economic bulletin that the state's housing market remains soft and is having a knock-off effect on the broader state economy. Now, remember, guys, Australia is basically built its economy off housing. It hasn't built it off exports and fabrication and production. A country is made strong by what it exports, right? And exports are key to GDP and growth to a country. The number of dwelling units approved rose by 37.3% in February, likely due to the jump in apartment approvals, the departmental secretary wrote. However, the index remains down 5.9% over the year. Weakness in the housing market is continuing to weigh on consumer sentiment despite strong labor market conditions. I don't know about the strong labor market conditions with the amount of closures happening left, right, and center, and I don't see it happening. But the bottoming out, that's a decent chance. Well, what you have to do is you gotta go from the peak of the increase. So when prices started to go nuts in Melbourne, this is how you do it. Then you calculate when the capital outflows of China were suspended of April or October of last year, September of last year, when the capital flows of China became suspended and the Chinese government was putting a clamp down on money leaving the territory because there was a runoff on China's wealth. Everyone was basically taking their money and parking it in Western countries like Australia, Canada, UK, and all those other countries we cover here. So it's very interesting how all these countries have the same effect. How the UK, Canada, and the whole western part of the United States. Canada has a $200 billion money laundering problem that I read an article, you could look at it on my channel, saying that Canada would be in a recession if it wasn't for money laundering. Oh, that's great. Without criminals, we would be in trouble. So it's really scary. I'm wondering if anybody has the cojones out there in Australia to start tackling the money laundering and seeing, because they've laundered billions through our casinos and they've laundered billions through shadow flipping here in British Columbia. So it'd be really nice to know if Australia has the same problem, because I haven't seen any money laundering thing in Australia. It's all Canada. It's almost like these guys had a meeting and said, okay, guys, we're going to target Canada with money laundering. We're going to do this to Australia. In the UK, we're going to do this. And then in America, we're going to do this. So I highly doubt it's that organized, but I'd like to know if anybody out there knows and could tell us. Aussie housing slump depends as Sydney listings hit 2004 low. What's happening? Listings are not being listed as much. People are going to hold back. A lot of people held back for the election too. So Sydney houses are hitting the market at the slowest pace since 2004. And Melbourne is also seeing a dramatic slide in sellers, adding to the concerns that Australia's housing slump will snap economic growth and force the central bank to cut interest rates. So again, they're playing around with interest rates now, and when the second they start playing around interest rate, they're just taking wealth away from the population. And it's dangerous doing that kind of stuff, because they've been binging on cheap interest. Australia's been binging on cheap interest rates for too long now. It needs to set rates accordingly. You're going to see a slump. Right now, the markets are open in Australia. I have a feeling you're going to start seeing a slide in the Australian dollar, because they're not hedging against inflation. So by raising rates. So either Australia has huge, massive reserves of gold that we don't know about, or everyone's going to get a 35% increase in their salaries in the next week across the board. So I'm not sure where that lies in, right? So new advertisements in Sydney homes dropped 21.5% in the last 3 months to April from a year earlier on the Domain Real Estate website, according to a report site. Melbourne listings tumbled 23.3%, and the number of new homes for sale there is at the lowest in almost a decade, Domain data show. The Reserve Bank of Australia on Friday slashed its growth forecast as the crumbling housing market prompts householders to spend less. Economists and fixed income traders expect the central bank will cut interest rates twice within a year after it decided against the easing policy on Tuesday, and it waits to see whether the president hiring strength of the past 2 years is maintained. And it goes on to say, the Australian Financial Review reported Macquarie Group Lot reduced rates on fixed and variable rate mortgages. Macquarie confirmed that the rate change is in an emailed statement. Australia and New Zealand banking group Lot lowered some of its fixed rates mortgage levels, cutting the 3-year by 30 basis points to a 5-year 20 basis points for principal and interest loans. According to emailed statement, the 2-year rate on interest credits were reduced by 20 basis points. Okay, here's the deal, guys, with this now. Now they're asking that the Australian banks start actually holding some reserve currency, because they have nothing in reserves. Why? Because nobody's depositing money anymore. Everyone's living check to check or paycheck to paycheck, or whatever you want to call it in Australia. People are living from paycheck to paycheck, and it's becoming really tough for people to have any savings at all. So when there's no money in the banks, there's no liquidity. When there's no liquidity, the banks could face huge default. But the problem is, what do they do? Hey, let's lower interest rates again. That worked before. Let's binge on lower rates. Why are they doing this? They're destroying everyone's futures. Just let it go, man. Jeez. Why? Because why is this housing crisis so different from the others? It's because it's so dependent on the economy. Housing 50, 60 years ago, housing was a place to live. You know, it wasn't a commodity. It wasn't they're treating it like, you know, like it's on the stock market, you know? They're treating it like a commodity, not an asset. It should be an asset, something that people own, buy, invest, take their time, you know, put some pennies aside for a rainy day, blah, blah, blah. No, now it's become spend everything you have on your house. That's why everyone's house broke. Sydney median house prices to fall below 1 million, analyst says. Yay, hip, hip, hooray. It's going to go below $1 million. Yay. In Vancouver, we're already starting to see teardowns, like really bad teardowns with no windows and cracked roofs and stuff, going for under $1 million. That's in Vancouver, Canada. Sydney's median house price is on track to dip below 1 million for the first time in 4 years, according to analysis by one of Australia's leading real estate websites. The latest Domain House Price report shows that Sydney's median house price is now $1,127,000. Wow, which is down 3% over the past 3 months. It's going down. Sorry, guys. I hope no one's yawning on my because of me. Domain senior research analyst Nicola Powell said that the pace of decline continues. Prices are likely to drop below 1 million in the next 3 months. The last time that was the case, it was in March 2015 when the median house price was $929,000. Oh, so it's back in 2015. So you start seeing everyone saying, oh yeah, house prices started getting out of control 2 years ago. No way, man. House prices have been out of control since 2012. Ultimately, obtaining a home loan is more challenging, and what that has translated into is there are fewer buyers in the market because buyers are having to meet stringent lending conditions. Yeah, we are. I mean, a lot of people are having a really tough time getting anything, right? And there's a lot of people that are you know, and you know what? And if you don't qualify to buy something, that means don't buy it if you don't qualify. Some buyers are unable to get finance, and if they can get finance, their borrowing capacity has been reduced. The most recent data from another key data analysis source, CoreLogic, confirmed the Harbour City's housing slump, having an average house price in Sydney as $880 large. She said there were also fewer investors and foreign buyers in the market and some stock. Unit prices fell 2% over the past 3 months. Median house prices $696,935. Mr. Powell said that it was likely prices would continue for the rest of the year. She said prices could be lifted a little bit by any interest rate cut, but that would not spike anywhere near as much activity we were seeing during the boom. The boom, guys, is when China was parking its money in Australia, plain and simple. There's no boom. Right? And then, oh yeah, and historically low interest rates, right? Now, what's Australia going to do? What are they going to do if they keep lowering rates? It's going to just cripple. There is wariness amongst buyers, she said. I think there is a renewed interest, but buyers out there, they're smart. They're knowledgeable in the fact that markets have been softening for some time, and I think they don't want to overpay. Mr. Powell says Sydney property prices peaked in June 2017 with houses at $1.2 million and units at $773,000. Bronte Capital's John Hempton warns of an 85% house price falls. That's the biggest. I'm trying to see let's see here. Which ones? I show you guys. I gotta bring this up every once in a while. Let me see. I found this. Let me lower the volume on this. Let me see what I said for in my opinion here. So this was from. Let's go back here. Sorry. When I predicted. Okay, so Sydney, Vancouver housing crash 47% by 2016. So now let's get technical here. Okay. This is an old video. So let's say 2016, 2017, 2018, 2019. Let's say that 47% plus the increase that was from 2016 to then. What if that's 80 points? What if I'm on the money with this guy? I don't think I am, but I'm probably close to 60, 70% because this was 47% by 2016. And because it was so hinged on the housing was so hinged on the economy, there was something wrong going on in Australia. And I kept saying, there's really something wrong happening in the Australian housing market. And they got rid of almost all my videos because they don't like it. This is Australia, Canada, UK, and New Zealand debt prison. This was November 11, 2015. I'm just trying to see if I had any other predictions here. Supply versus demand illusion. Yeah, oversupply coming in 2016. I was dead wrong on that one. There's going to be a lot of people throwing stuff on the market, but I was completely wrong on that one. And Sydney, Vancouver, Auckland, London, massive housing correction, spring 2017. I was right about London on that one. I was dead right on London. I was right on London because they've been in a 20-month decline. But Auckland, 2017, I was wrong because it started trickling down in 2018. Vancouver, I was wrong. And Sydney, I was wrong. I was completely dead wrong on these. Because I didn't expect the markets to keep going with fueled like this, right? I think that's it. Sorry, guys, I had to bring that. I always bring that up because I like to see. So let's say my 47% plus the 2-year aggregation might be 75%. So house prices in non-aspirational suburbs, New South Wales, outer Melbourne, where home prices are high compared to the area's income, could fall as much as 85%. Bronte Capital's founder John Hampton said a 1.4 million priced house in northwest Sydney, about 40 to 50 kilometers from CBD, no reason to exist, Mr. Hampton said, is in a podcast interview with Jolly Swagman, which is previously spoke to the likes of The Economist of Jonathan Tepper for the former Prime Minister Kevin Rudd. Mr. Hampton and variant perception economist Mr. Tepper famously found evidence of fraudulent mortgage broking activity in Western Sydney. Yeah, a lot of bad deals on the books, a lot of really poor underwriting, approving deals, even creating fake pay stubs and fake yearly incomes and crap like that after posing as a gay couple looking for a home. Mr. Hampton, whose hedge fund was one of the most successful in 2018 alongside Robert Luciano's VGI, and house prices in areas such as Roose Hill could fall as much as 50%. Roose Hill, which has a lot of house and land development, is one of the places in the center of the housing bubble, he said. He predicts that outer Melbourne suburbs could see a 40% house price fall, while the other suburbs of Newcastle and New South Wales could see an 85% price decline. Country towns that are shrinking are also in the firing line. Places like Wollongong and south of New South Wales, which is one of the lowest populated areas in an unreasonably excessive house price to income ratio in the world, may also fall prey to the huge price falls. I don't mean to pick on Rose Hill, but it's the area where lending standards were the worst we have found, he said. I look at house prices and income and they don't match. Yeah, this is pretty bad. So it goes into stocks here. Sydney property prices to rise by the end of 2019, analysts predict. So we're getting a lot of tug of wars here. You're going to see a lot of battle of the tug of wars here between who's going up and people predicting increases and people predicting declines. And I wanted to bring this one up because it's kind of interesting to see. This one was updated an hour ago. So let's see what they have to say here. Lending property analysis believe that Sydney market will bottom out by the spring and hit positive territory by the end of the year on the back of confidence boost from the coalition surprise election victory. Forecast of Sydney's property market, which has dropped 14.5% since its 2017 peak, had outlined falls due to the market softness and uncertainty around Labor's proposed negative gearing policy. Here's the deal, guys. This is what's going to happen. I'm going to tell you straight up. They're going to have to all these fake asset bubble gains with the flows coming in from China that propped up these cities and inflated asset bubbles to these obscure amounts of money. I think what's going to happen is they're going to have to return about 12 to 15 quarters of growth before it hits normalization of income to income ratio to meet borrowing. So to make sure they could afford to service these mortgages, right? So it's kind of scary what's going on. It's kind of scary where these things are headed. I don't believe the prices are going to start gaining any gains at all this year. I just can't see people making enough money. There's just too much exodus out of the big cities. People are still leaving the big cities. I spoke to someone. They're saying they're leaving Sydney. They left Sydney, on Monday of this week. Okay, today is Wednesday, so people already left. Sorry, today's Tuesday. So people left Monday of this week, which was probably Sunday my day. But anyways, they said they left Sydney and they're moving somewhere else. They found cheaper rent in half. And they found decent jobs making less, but not killing themselves to just live. Anyways, guys, I want to know what you guys think. Affordability is not there. I just don't see it. I don't see prices going up in Sydney anymore. They got to retract all those false quarters that were propped up. I need someone in Sydney to please, if they don't mind, if someone's got the cojones, please do a video. See if they just start tackling the money laundering situation. I have such a tough time believing that the money laundering is only in Canada, $200 billion. And it's helped our economy too. Without these criminals, Canada would be in a recession without them. Wow, look at that. Go back to some of my other videos, you'll see what I'm talking about. And you guys will be like, what? Canada needs criminals to keep its economy going? Or keep it in afloat? Yeah, I wonder how much is laundered through Australia. Oh, yeah. If you got, bad lending practices and just all this Mickey Mousing and bad loans on the books, I'm pretty sure there's billions of dollars laundered through Sydney and Melbourne and other even smaller towns. Anyways, I wanted to show this to you guys. My son painted this today. My son painted this for me today. And he painted this one today. That's his dog. That's our dog. So my son painted these for me today. So I wanted to show these to you guys here. Let me know what you guys think. Comment below. And don't forget to hit the subscribe button. And thanks for watching, guys. And if you want to support this transmission, just share one of my videos.